Many thanks for joining us. This is Business Incorporated on Channels Television. I'm Chimezie Obi Iwago. Coming up on the show, Nigeria's total capital importation hits $8.5 million in fourth quarter of 2019. Nigeria Burkina gets second term at OPEC as group extends output cuts into 2020. Plus, Kenya's Safaricom appoints former boss Joseph as interim CEO after Kolimore's death. Let's get the show started with the markets, and it was a mixed sentiment amongst markets in Africa at intraday. The market here in Nigeria, as well as the JSE index in South Africa, were down 0.57% and 0.69% each. Egypt tilted to the north, up 0.16%, while Kenya closed in the green on Monday. And in the Middle East, Saudi Arabia's stock market fell at intraday after 5 days of gains pressured by its financial stocks. The Saudi index was down 0.41%, with Arab National Bank dropping 1.1% and Samba Financial Group falling 0.6%. This comes after 5 days of gains, and the index is still up 13% this year, led by foreign investors. Now, the Abu Dhabi index was up 0.2%, with First Abu Dhabi Bank adding 0.5%. Qatar's index edged down 0.17% after 3 sessions of gains, pressured by a 0.9% dip. In Dubai, the index traded 0.20% higher, with Dubai Islamic Bank down 0.4% and Emma Malls lower by 0.5%. And in Europe, stocks traded cautiously higher in early trade after President Donald Trump said that trade talks with China, which had stalled in May, have already begun following his meeting with Chinese President Xi Jinping at the weekend. And just days after reaching a truce in the U.S.-China trade war, the White House went on to ratchet up pressure on Europe, proposing $4 billion in potential additional tariffs on European Union goods amid a long-running dispute over aircraft subsidies. Well, let's bring in Conrad to unpack this and more for us. Hello, Conrad. Good afternoon.
Good afternoon, Chimmy. Thanks for having me back on Channels TV.
Right. Well, the U.S. trade representative is proposing additional tariffs of $4 billion over EU aircraft subsidies. Tell me, the situation between the U.S. and China has just relaxed a little bit over the weekend. Is this putting Europe more in the crosshairs?
Yes, Chimmy, many people here in Europe are afraid it does. Of course, as you said, this dispute between the United States and Europe over subsidies for the aviation sector has been ongoing for a couple of years. It's a long story, and the WTO already, the World Trade Organization, already has stated that both sides, the Europeans and the Americans, in the past illegally subsidized their aviation producers, namely Boeing in America and Airbus here in Europe. But of course, the fact that the U.S. Trade Representative, Robert Lighthizer, is mixing this dispute again with all sorts of tariffs on all sorts of different goods, like, for example, wine, cheese, Scotch whiskey. This is stuff that people in business here in Europe find difficult to bear, because it really means that the U.S. administration is mixing the topics. It's very difficult to predict. And that is why, yes, the answer is that many people here are afraid that while the U.S. is getting a bit more peaceful with China, it might now focus on what it has to complain about in terms of Europe.
Nevertheless, the start to the second half of the year on the equity markets was a positive one. The S&P 500 in the United States managed to reach a record high on Monday. What's the situation like in Frankfurt today? How's the German index doing?
Well, the German index is holding up, I would say, pretty well. Yesterday, the German DAX, our equity index here, well, not exactly, it has reached a record high like the S&P 500, but it had climbed to the highest point this year so far. So German stocks are valued at a relatively high level. On the other hand, I have to say this has a lot to do with what's going on the bond markets. The bond yield has fallen to record lows. The German 10-year government bond yield, the Bund, that's what it's called, it's now yielding at around about minus 0.4%. That's a new record low. And what do you do if you are an investor seeking for a little bit of return with government bond yields being so super low? You look for something else, and what investors do is they look on the equity markets. The underlying earning situation of businesses does not really warrant this high level of equity prices. Neither does, the overall economic outlook. Today we got reports from the German machinery and engineering sector, which reported another slump in new orders. So the overall mood in terms of economy is not really good.
Well, markets are hoping for continuous support from monetary policy makers, but how long can this hope last? Today, the Australian Central Bank lowered interest rates to a record low, but the stock market in Sydney has not been inspired.
Absolutely. The only part of the stock market in Sydney that sort of saw a little bit of gain were the small caps, smaller companies that might still benefit from, even lower refinancing costs driven by low yields and low interest rates by the central bank. But the overall market in Australia really not inspired because, of course, the scenario that I just described, the interest rates lowered by the central banks and this putting pressure on bond yields and this as a consequence driving potentially stock prices, this is something that might be going on for a while. But in terms of the economy, the big question being discussed on the trading floors is how long can it go? We've seen super low interest rates by the central banks, super generous monetary policies by the central banks for a couple of years. And yes, they have sort of produced a certain amount of economic recovery in large parts of the world, but they have not managed to inspire a sustained, self-driving economic upswing. And that's why there are many people doubting out there that central bank policies, more generous one, is what we need. What we definitely need is policies by the governments and by businesses to come up with ideas to really drive and boost growth. This is what's really needed. You have to drive the real economy as well. Monetary policies alone is not enough.
Well, Conrad, whatever happens, I guess markets will continue to keep the hopes flying. Thank you for your time and enjoy the rest of the day.